Hello everybody, well, let's have a look at Bitcoin, shall we? I suppose it's only fair considering what the hell's been going on today. So I'm sure there's a lot of videos out there saying a lot of things. You probably watched them already. I've just seen the I don't watch other people's videos, but they do come up on my timeline, and I do get to see to see the state of YouTube these days. So I mean, it would appear that everybody is looks as though they're calling for the beginning of the end, right? And you know, I don't know, I don't watch their content, but they may be onto something. But at the same time, let's think about this rationally as far as the chart is concerned. Let's work out, you know, what's actually taking place. So first of all, you know, Bitcoin's has been in a slight bit of trouble, but it was looking relatively positive until yesterday. And so what we were doing was we were playing within this channel. This is the channel that we're playing within. This was the deal with Bitcoin. So we came up a little bit sometimes, below it sometimes, a bit up below it, a bit below it, and then yeah, and now we're back below it again. Okay, so this wick was a deeper wick than the last one here. This the catastrophe wick down here, but this is driven not based on, you know, the chart analysis, technical analysis, whatever you want to call it, lines on the screen. It was based upon a single tweet with some, you know, definite sort of, I suppose, clout and relevance behind it. So Elon Musk, long story short, isn't going to be accepting Bitcoin as payments for Tesla cars anymore because it's energy inefficient, which is well, it's kind of true. But even if it's not energy efficient, it's definitely not cost efficient, is it? I mean, you'd be better off paying with, you know, fiat currency or other cryptocurrencies, for example, which he did allude to on it, than Bitcoin. Bitcoin is really not very good. It's terrible actually for making payments with. Is terrible. It's just, you know, it's just no good. It's too expensive. It's too slow. It's not a payment method, right? It's a novelty if people want to accept it, but it's not viable for that kind of. It's just not designed. It might have been back in the olden days, but it's not now. So I don't blame him for that. It's he's a businessman, and if I was running a business, I would accept Bitcoin payments if the other person was, you know, prepared to pay for the mining fees or whatever. But overall, you know, it's pretty bad. And he went down the route of saying that it's all because of the you know, the carbon emissions. You know, it does take a fair whack, you know, to power the Bitcoin network. It is the biggest, most secure network in the world. It doesn't come without cost. So yeah, he's. I'm not going to blame him for saying what he did, but the overreaction at the moment to the market is pretty savage, and that, in my opinion, that's what it is. It's an overreaction, and when we get these big pumps, because I mean, this is an Elon Musk pump here. I'm going to accept payments onto yeah, for Tesla cars. That's what this wick was, right? You can see the behaviour of the wick. It went all the way up and all the way down. So I am inclined to expect a similar behaviour on the way down, and a buy back up, which is kind of what we're getting at the moment, isn't it? Really, the only difference is that we were coming out of I suppose a consolidation here, and the bottom was likely in. We had a low here and a higher low here, and so the direction was going to be up anyway. Elon Musk caused his wick, sold off into it, and then it went back up again, as it would have done anyway. The difference on this occasion is that we've been meandering sideways with the very likely possibility that we would go up, but it still hadn't made. We've got our lower low here, we've got our lower high here. Technically what we've got now could be, it depends on where this candle body closes today, could be a lower low. As far as the wicks are concerned, they are lower lows, but the candle bodies are what count the most, especially in a situation like today where this dump was largely caused by a single tweet, by a single person, with implications obviously of the use case of Bitcoin, but not its actual value. We look at Bitcoin as a store of value, all right? That's the best way to look at it. It's not currency. It can be a store of value. I couldn't go to I mean, I'm sure some people would accept it. I couldn't go to my corner shop and drop them a nugget of gold, you know, and ask for, you know, whatever it is. Some might accept it because they'd recognise that there's value to it, but most of them probably wouldn't. I don't know what I'm doing with this. Yeah, obviously a nugget of gold's worth a fair, but I'd have to buy something very significant from the shop, you know, because gold is worth a fair whack. But you see where I'm coming from. So look at it like a store of value. It's not a payment method. It's not valid for that kind of thing. So we've got an overreaction in the market. Okay, so we may be receiving our dead cat bounce. The only problem is that we could now technically be entering and confirming a downtrend if we get this lower low confirmed. The lower low is more or less where we're trying to stay above right now. Areas of 49,000 basically. 49,000 is and below there, a candle body close below there is a lower low. So we've got our high, lower low, lower high, and potentially a lower low if we can't pull our socks up and drag this above 49,000. So that is downtrend still confirmed. That would render this entire range that I was speaking of almost obsolete at that point now. We were hoping that we were going to play within this range and break out eventually, but actually if we are entering into a downtrend, we have to talk about actual downtrending targets. So the first target would be where we are at right now, the 20 weekly. This is the target. This is a target that a lot of people have been waiting for, and it's a target that gets tagged on uptrends all the time. Bull markets on any asset will eventually at some point come down to retest the 20 weekly, and should, you know, if everything's okay, this could be the absolute low. This could be it, and this is basically where we are right now, holding a lot more relevance to that 49,000 zone, which is more or less where the 20 weekly is. Now the 20 weekly has been compromised for the wick. The wick came down to the 21 EMA on the weekly. So again, there's another moving average that I use for crypto, because cryptocurrency moves exponentially. That's why I like to have exponential moving averages on my charts. So it is what it is, and this is where we are. So the first target is here. So if we're looking to enter into Bitcoin for an anticipated move back up, this would be the first target. And remember, I'm talking about multiple targets here. I'm never all in, I'm never all out. I scale into to price targets, and I scale out at price targets. That's the best way to do it. Don't put all your eggs in one basket. Just have multiple baskets, and anyway, you see where I'm coming from. So this is the first target, and it's a realistic one too. Pretty much where we're at right now, and we're talking about candle body closes as well. So we'll get wicks below it, that's fine. We've already had a wick below it, but a candle body close above here is still okay for the long-term picture. It's actually pretty good. I'm glad that we've touched it. We've been waiting to touch it for a very long time. This is the first time we've tagged it in what would be probably since over here. So a long time ago now, almost a whole year ago was the last time we came close to this 20 weekly moving average. So that's target number one. Target number two, we're going to have to look at previous price action, and this looks like an appropriate area, I would say, more or less, for the next price target. A fair old drop, I have to say. Definitely a big drop. Down at $39,000, and that would be a further 21.5% drop. The reason we've got this in here is because previously, when we were making this bull run, we had our first decent correction. Candle body close, wick, candle body close, breakout. 39 or 38,000, 38, 39 is a very realistic area to perform a really decent bounce from, and maybe the reversal will take place from there based upon previous price action. Now if this one is compromised, then we will take another leg down, even deeper and even further, by another 25%, down to 28, between 28 and 29,000. That's where we found our wick bounce, wick bounce, wick bounce, and also a rejection here. So you know, we're taking large incremental steps down if this is the case to find where the bottom would be. Also, interestingly, if we think about where this target is down here at this week at the moment, this won't be the same next week, but it is right now. That's where the bottom of this Bollinger Band is. Now we do have other areas like the exponential 50 here. We also have the 50 simple moving average just down below here as well. So these are all realistic targets if the worst came to it and we broke down below this 20 weekly moving average and the 21 exponential weekly moving average, which is at 46,500 thereabouts. So we have to think about these in realistic, you know, where are we looking to buy in? Am I looking to buy in? Why would I want to buy in here? And what if it doesn't work out? This is how we do it. Stock and flow ratio still, you know, is unchanged. If we focus on that, then we are thinking about a Bitcoin of $100,000 by the end of this year. So there can be plenty of noise in between that, which is what this could quite easily be right now. This could be extremely noisy and we could even go all the way down to that low target, 28,000, and it'd still be perfectly okay to expect it to go all the way up to $100,000 by the end of the year. But that's not where we are at right now. We're not at the end of the year, we're in the middle of the year, not even that. So there's plenty of price action to happen throughout the rest of the year, whether that's down and up, or up and down, or any way apart from to the left. So we've got to work out, is this what is your strategy? What's my strategy? I'll tell you what, I'm not a financial advisor, but my strategy remains the same. You play the odds, you play the cards that have been dealt to you, and you buy in at appropriate areas. 1 appropriate area, 2 appropriate areas, 3 perhaps, and 4. So we've got targets all the way down, just in case it goes all the way down. And if it doesn't go all the way down, and it bounces from here, then great, the party's still on. We buy into strength, we operate as we would do normally, but we still have a contingency plan if things don't work out, and that is the best way to trade. One other thing we've still got going for us is this money flow index. We still have the structure forming on here. It's not performed the big bounce that we were expecting yet, but it's still supported on this uptrend here of support. Every time we come down to here, we have a little mishap here, but more or less bounced, and these bounces all correspond to large dumps. Large dump, large dump. This was the March crash here. Large dump, higher high, higher low, big pump, another dump down here, a higher low, and then a massive parabolic high back into January. This is where the market cap was slowly draining out into altcoins, and technically still is, and then we came down to tag it a couple of weeks ago, a double tap here. This could be it. This could be the place where it bounces from. It could be. It's not completely compromised its structural integrity for a bull trend. Definitely not. Not today it hasn't anyway. Not this week it hasn't. It could do, and that's why we have these realistic price targets based on previous price action on a weekly, which is going to give us the biggest and best opportunity to get in. And this is obviously for spot trading. This isn't for you crazy leveraged guys out there. Leverage is a dangerous thing, especially with something as volatile as cryptocurrency. This is why we use bots as well. We have a number of different ways that we can make the most out of markets, whether it's up, down, or even sideways, really. So this is my view. This is how I'm choosing to view it. We're okay right now as far as the structured integrity of the weekly chart is concerned. The money flow index is still okay. Everything still seems okay. But if it does break down from here, it could get particularly nasty. And if it does, I'm ready to catch bounces here, or maybe even here. Anyway, that's all there really is to say about it. We're going to have to wait and see how this one plays out. Remember that this whole thing was born out. This large dump was all born out of a single tweet. Think about that for what it is. It is just an overreaction to a tweet. However, because we weren't in an established uptrend at the time, it does lend the concepts. It gives us I suppose there is opportunity for further downtrend as a result of that. Because it's okay to say bearish things about Bitcoin when it's in an uptrend. But when it's beginning a potential downtrend, it might not be quite so forgiving. So we have to think about that, and that's why we have those horrendous targets, which will probably get me a lot of hate on here. It's not because I expect them to get hit. It's just in case they do get hit, I still want to be able to make some profit out of this market, and that's how I will do it. Buying low, selling high. The end game is still a $100,000 Bitcoin, give or take, by the end of the year. So, what have I got to lose? Do you know what I mean? That's all we have to think about. It can be as simple as that. I don't look at charts generally on anything other than a daily time frame. Is pretty much my staple. I don't go in for smaller term time frames. And the best way to look at it is just how we just have looked at it just now, on a weekly. A weekly gives a more appropriate way to view this chart. And when you think about what's happened on this weekly, it's been up very significantly. It can come down, but it's not going to go down to zero. The last area I would expect it to come down to really is about 28,000, 29,000, give or take, and that is still a win. I don't know how long you've been in the market for, but for me, I've been in it for several years. So most of my Bitcoin entries have been pretty low. So to see a correction, even nasty one all the way down to there, it's not really a big deal to me. The big picture is still a Bitcoin, which will lead us up to around about this kind of zone, roughly, by the end of the year, which is all the way over here. This is the end of the year. This is where we expect it to hit by then. It seems pretty obvious to me that we can come all the way down here and still find our way back up there by the end of the year. So I'm okay, staggering in here, and here, with the anticipation that we will hit here by the end of the year. don't panic, everybody. Everything's fine, I'm sure. But if it's not, it was still a good run while we had one. And I hope you have a nice day. But don't panic. Don't panic. I'm not here to say that everything is absolutely fine. It'd be irresponsible for me to say that. But I don't think things are as bad as probably some YouTubers might make you feel. You know what I mean? I don't think it's that bad. But be prepared for further downside, potentially, you know, close to another 40%. Anyway, have a nice day if you can. Take it easy.